IFRS 18 has been issued and now it is tested in SBR and also in financial reporting exam. And unfortunately, some of us still use old books. This also means that people use old practice questions that may have something that is different from how the things work now. That's why I would love to discuss how IFRS 18 affected the cash flow statement. Well, frankly speaking, IFRS 18 bothers with P&L. But IAS 7 was also amended in light of the issue of IFRS 18. First of all, before, any figure could be the starting figure for indirect method of cash flow, operating cash flows calculation. So some companies would use profit before tax. Some companies would use operating profit. Some companies would use profit after tax. It was madness that has been with us for years. Now there is just single starting point. This is operating profit. So this would make the financial statements more comparable. Operating profit or loss, not profit before tax. So this means that now we don't need to add back interest charged, tax charged, because operating profit does not have it. But for operating part of cash flows, we will need to deduct the tax that is paid. As for interest, as for dividends received or paid, now they have prescribed categories. Before, any of these lines could be in any part of the cash flow statement. And many companies would put interest paid in operating cash flows or even dividends paid in operating cash flows. Now, the approach is like that. If you receive interest, if you receive dividend, that comes from your investing activities, and as such, that is going to be apart from investing cash flows. If you're going to pay interest or pay dividend, that is going to be a part of financing cash flows. No choice. But of course, we do remember that IFRS 18 talks to us about the specified main business activities, and there could be companies like banks. So if for them that would be on normal business operations, like for banks, interest paying, interest receiving, and so on, then we would consider the most appropriate category. So for example, operating cash flows. And we do know that P&L now has 3 categories. It also has operating, it also has investing and financing categories, but make no mistake, they are not the same as in cash flow statement. So, for example, when we're talking about the purchase of property, plant, equipment, the cash flows are going to be shown in the investing part, right? But when we're talking about investing category in P&L, it has nothing to do with the property, plant, equipment, because we don't put the cash paid to P&L. That is just cash outflow. And as for depreciation, it is shown as part of operating part of the P&L. So these categories are in no way aligned. These have been the major changes. So pay attention to the starting point, interest and dividend. And the rest is more or less the same. I hope it was useful. Consider subscribing and sharing this podcast, because I would love to see more people benefit from my videos to pass SBR easier. My name is Lilia Kirilenka, and I will see you next.